Hello everybody, Ignatius L. Jackson CPA here with another video for you. So I wanted to just recap a little bit for you the end of the year, some stuff to think about, as well as just some other events that kind of happened this year, some other critical stuff to kind of be thinking about as we have a few days left. So I'm about to head, as you can see from my shirt, over to Atlanta for the Peach Bowl. I'm going to be there for the game. Hopefully the Devils pull out. Go Devils, fork them, right? Forks up, whatever you want to call it, right? And so just really looking forward to spending some time over in Atlanta and seeing the Sun Devils hopefully beat the Texas Longhorns. So wanted to just go through a few things. So obviously another exciting thing happened this year from a business standpoint anyways. I mean, there may be some other reasons why you may not like the fact that Trump won the presidency and the Republicans won the majority in the House and the Senate. But one of the benefits of all that is hopefully next year in 2025, we're going to see a new tax bill that extends a lot of the cuts that we experienced back in starting in 2018, and hopefully for a period of time, and maybe even a little bit better than those tax cuts were during that year, okay? So that was one benefit of this year, hopefully, is that we'll see some exciting changes from a tax standpoint for 2025 and going forward, okay? Another thing that's been happening, if you haven't been paying attention, there's been a lot of drama about business owner information reports. So you got business owner information reports, which is through FinCEN. There's been a court case that in Texas where basically the court said you no longer have to file those reports because they believe it's unconstitutional. And then FinCEN appealed it, and the initial court of appeals said, oh, okay, yeah, you can go ahead and actually keep the penalties and everything in force. So they removed the injunction. And then a higher version of the appeals court decided, well, actually they were wrong. This should still be in place. And so now you have a bunch of people just trying to figure out what the heck to do. So it's ultimately your call. At the end of the day, it's your choice what you want to do. At the very least, you have until January 13th, even if somehow the case makes any additional, thoughts that come out about it, any other orders that come from it. But you have at least until January 13th at this point. And, if you want to roll the dice, you can definitely just ignore it for now and just wait and see what else comes from it. And so it's one of those things that we're probably not going to update on constantly. So just pay attention to the news. Make sure that you're looking at articles and stuff like that on it, searching for it periodically to see any updates. I have a feeling if I had to put on my little Oracle hat or, think about what the future is, I have a feeling that under the new Trump administration, they will probably find some way to get rid of this rule. I think it's become pretty unpopular. And the fact that we have some court cases saying it's unconstitutional, I think you're going to see the new administration just kind of let this thing die if it doesn't, do so before that. And so, but I can't guarantee that, obviously. And obviously you want to talk to a lawyer because that's more legal advice. But that's just my personal opinion on where I think it's going to lead, okay? Some other things to kind of think about from an accounting standpoint, Roth IRA conversions. There's still time in the year to do Roth IRA conversions. Not a lot of time, but you still have a little bit of time. So something to think about before the end of the year. Just kind of consider where you are in your tax brackets and stuff like that. My personal opinion, if you have a long bandwidth to grow the Roth IRA, like 20, 30 years, the tax rate that you're paying on the conversion is pretty minuscule compared to what you're going to be saving over the long term. And so just something to kind of think about and consider, okay? Pass-through entity tax. So if you live in a state where you have a high tax rate and they allow you to do a pass-through entity tax for your S corporation or partnership, highly, highly recommend you look into it and consider it. It doesn't make sense necessarily in all states to do it, but in quite a few of them that allow it to occur, it makes a lot of sense to go ahead and elect the pass-through entity tax, especially in Arizona where the tax rate is the same as the individual income tax rate from a state standpoint, and we have a flat tax of 2.5%. So it's really a no-brainer in Arizona to go ahead and do the pass-through entity tax, because it gives you a tax deduction at the federal tax level, and you get a tax credit at the state level for the amount of tax you paid as an entity to the state of Arizona. Key point, you have to make sure you get those paid before 12/31 in order for it to count for 2024 taxes, okay? If you want a federal tax deduction for 2024, pay your estimated pass-through entity tax before 12/31 of 24 in order for it to count for 2024 tax year, okay? Another thing to think about, if you're an S corporation, which we have a lot of clients that are S corporations, consider doing your W-2, looking at your W-2, final W-2 to make sure it's reasonable compensation for the year. If you're a little bit low, go ahead and pay yourself a little bonus check before 12/31. Also, make sure you have your health insurance premiums on your S Corp W-2. I'm seeing this more and more where people are forgetting about the health insurance premiums, and we have to either amend the W-2s or sometimes just ignore the health insurance premium because the business owner kind of screwed it up a little bit. So kind of think about it, make sure it's getting done correctly, okay? And then estimated tax payments. Those are not due by the end of the year, but they are due by January 15th for your Q4 estimated tax payments. So something else to kind of think about from either a federal and a state standpoint, okay? And then if you have any assets that you need to acquire, by all means, if you can get them placed in the service by the end of the year, great. Now, key point, placed in service is essential for depreciation and bonus depreciation. That means you have to buy it and also basically receive it, and it's ready for use, okay? So you can't just place an order for something. It has to actually be received by 12/31 and ready for its intended use in order for it to count for depreciation purposes. So something to really think about there. And then as a reminder, bonus depreciation as of right now is 60% for 2024 tax year. Again, this is another thing I think in the 2025 tax cuts and Jobs Act, whatever they call it, probably the same thing. I think you're going to also see that bonus depreciation will probably come back to 100%, and they will likely make it retroactive for 2024, but there's no guarantee. So just something to kind of think about and consider. And even at 60%, it could still make sense to do things like cost segregation studies for your rental properties and other things like that. So just some other things and factors to think about and consider there, okay? So those are just a couple of quick items that I want to touch on. 2024 was a pretty good year overall. A lot of beneficial things for business owners and taxpayers coming out, hopefully in the next administration. Hopefully this BOI report stuff kind of goes away and just dies down. And, I hope everybody had a very Merry Christmas and you have a Happy New Year. I'll be in Atlanta celebrating New Year's this year. So it should be interesting. I think ASU has a couple of events, or I guess for the Peach Bowl, they have a couple of events. So we'll be there. I'll be there just kind of taking care of some of that and experiencing some of that. So, well, thanks for tuning in. Hopefully everybody enjoyed this quick little video here, just kind of recapping some of the 2024 items, and go Devils.